Everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. We're going to rip through Twitter. We're going to talk about wealth, commodities, financial markets, the stuff that I get really passionate about. Well, at least one of the things. I also get passionate about, I should say, health. Maybe not necessarily eating per se, but working out, doing that stuff. Used to lift weights quite big. And obviously, I love cars. I don't know why. Mountain bikes, cars, dirt bikes, motorcycles. I like all that stuff. So let's dive in and give you my financial opinions around all this. And again, it's just my opinion. It doesn't mean that I'm going to be right 100% of the time, but it is another opinion that you can listen to and at least gain some entertainment from. So let's dive in and take a look and see what's going on. And don't forget, we do have a coupon for people who are interested in signing up to the website. It's 50% off for the first month called August. So let's dive in and see what's going on with the markets. You can follow me at _finance, and you can go to the website and use that August coupon code for a 50% discount on the first month. Lauren says, which is the bigger milestone, 100K net worth or 1 million? Interested to know what you guys think about that. Obviously, I'll interject my opinion. I have hit both of these. I don't know what net worth is going to do something for you, but I'll just say this. As you get older, going through your 20s, you kind of just live weekend to weekend. You're just looking to party with your friends, have some fun. Maybe you're playing some softball. Maybe you're playing hockey or some sports, volleyball, whatever it is. Having fun. And then in your 30s, you start to reflect on your career. And obviously, you're saving money at that time. And at some point, you're going to realize it's like, you know what? I'm working my butt off here and I'm not really making that much more money. And you're going to start to question kind of your path that you've taken. That can happen, 28, 29 starts there. Things kind of slide off the rails a little bit as you get older in your 30s, maybe even in your 40s. And maybe this doesn't happen to everyone. It happened to me at least. And you're looking over there at your net worth and you're saying, how much is it going to take for me to stop these annoying things from my life? That's really what it is. When can I stop working? How can things become more convenient for me? You continue to pile money away. I probably hit 100K net worth. If I were to guess, I don't know, 24 or 25 years old is probably when I hit 100K net worth. That's my guess. And then what happens is, as you get older, your expenses ramp up. If you have kids, if you move out of your parents' house, if you're living with your parents' house, or if you're living with roommates, your expenses do increase with time, and that may or may not impact how much you save on a monthly basis or yearly basis. You could have unforeseen things that occur to you, so your net worth is going to go up and down based off of many things that could happen. You could have health-related issues, etc., etc. At some point, and I don't know what that point is for everyone, and I think this person's maybe asking this question, is you'll cross a point and then you'll feel, I'll just say, comfortable. And that point is different for, I think, everyone else. And then you just stop caring about the stuff that you really don't care about. You care a lot about the things that you really care about, and you focus on those things, and you want to maximize the things that you care about, and you want to minimize the things that you don't care about. Money is a factor and provides that tool for you. It's the fuel for it. And I don't know what milestone that is for everyone. I think whatever that amount is that changes you as a person is the milestone. That's how you know you hit that milestone. If you're young and you continue to save, you'll know that you're like still dependent on the job. Like you need that job. You can't walk away. You can't be like, screw this. I don't need this. I don't think 100K net worth is a huge milestone because you're still going to feel those pressures from that job, but you're going to start to realize like, hey, I'm saving a lot of money. This is cool. And you start to build momentum. So it's important to hit 100K because you're building momentum. And I think you start to realize that momentum you're building. 1 million, I don't know. It depends. It depends on the person if that's like a big milestone or whatnot, and how much you care about it. I don't really care about my net worth or the money that I have. It's more about the things I can do or the things it allows me to do with the money I have. So it won't be a huge milestone until I can say, you know what, I'm done with this crap that I don't want to do anymore. That's going to be the big milestone for me. That is going to be just gigantic. So I think these are all milestones. I get it, and I'm sure having them is good. But I also think it depends on how easy it is to get to those milestones. For me, hitting to 100K net worth was pretty easy. Getting to 1 million was much more difficult because I had a lot more expenses along the way than what I had foreseen. And, obviously I moved around, I did some things, and I couldn't save as much money. So I think the bigger milestone for myself was 1 million because I had my income, but my expenses went up as I moved and lived by myself. Obviously had kids, got married and all this other stuff, and had to basically support everything. So for me, the bigger milestone was 1 million, and hopefully I can accelerate the compounding going forward. And hopefully, 2 million, 3 million, that becomes a lot easier as time progresses. It says we battle against the weak oil demand recession narrative for over a year. So what are the real-time tools and refiners saying? To start, Rystad's real-time cube shows that global gasoline and diesel and jet fuel demand, 50% of total oil demand, is up 1.2 million barrels per day year over year as of August 1st. It's quite a bit of demand increase, guys. Pretty big demand increase. That is also, I think, related to money in the system and credit in the system, if you want to know. We got Ponzi finance. A lot of these guys are doom and gloomers. But in this case, I think he's actually right. It says stages of the super bubble used S&P 500 from 2010 to 2023. And guess what? That is the correct stage to use. You know why? Because the real estate cycle bottomed in 2010. And that was the recovery phase. The recovery phase is where S&P takes off and it makes all the way up. We go into a bubble, we come back down, and then we go back up, which is the bull trap. Ye is correct. This is the return to normal. Like I said, I don't know if we're going to go a little bit higher. I don't know if it's just going to turn. I don't know the exact peak, but he's got this basically exactly how I'm envisioning it to the T. He says there's nothing to fear. Minsky moment is here. The Minsky moment is when this thing really capitulates. It goes down. And we are in the real estate cycle for this to occur. Interest rates are continuing to go up, and the real estate market is high, and it may even go higher. That's why the home builder stocks are continuing to rip to the upside. At some point, that will peak. And I don't know when that is. Maybe it's sooner than I think. And then everything could potentially crash at one point. Are we there yet? Don't know. A lot of people don't know the exact timing of it. We could also have the S&P pull back and commodities still go up, I think, for a period of time. And we could also be earlier than what I think. This could also be a crash that is not driven by the real estate market, but is driven by interest rates. We continue to have low inventories. Then when the crash occurs, they lower interest rates, and then they send housing market to the moon. That will be the peak of the market. So we could have a slowdown in 23 here or 24, and then they lower interest rates and they send it to the moon. They send real estate to the moon. They send the home builders to the moon. They send all this stuff to the moon, which is a possibility. I'm not saying that's 100% my prediction, I'm just saying it's a possibility. But he's got it pretty much locked in here, and probably pretty correct from what I would say. Scroll down, Martin. He says, I can't think of a single person with a plausible explanation why oil is down today. I've talked to many, including commodity traders and asset managers. Not a single one can figure out why the selling today. It was the largest U.S. weekly crude storage draw in history, and oil is down on U.S. debt downgrade. Go figures. Well, I can tell you, if I were to guess, it's interest rates that's pricing the markets, and everyone is just getting scared, perhaps. At one point, or maybe at some point, I should say, when interest rates go up uncontrollably, people are going to be scared to own bonds and maybe even run into commodities and oil and precious metals. I don't think that's there yet. It might take some time, but we'll see. But yes, this is true. The fundamentals continue to get better with U.S. crude storage and the price sells off. It happens, guys. That's why we need patience. That's why we need courage of our convictions. That's why we do all of this analysis. We look at this stuff. We know the inventory levels. We know the ratios. We know all of the fundamentals behind these markets to say, it's just interest rates bringing everything down for a little bit. He says, at what age did you start investing in the stock market? I started investing at the age of 22. I graduated college. I worked at a large aerospace company. I looked around and said, you know what? I don't make enough money. I looked at a lot of the people that I worked with, my colleagues. I said, they don't seem that rich. And I just looked around and said, you know what? I want something better than this. I don't think I make that much money in the area that I live in. It was in Huntington Beach at the time. So I dove into investing, looking at it as another way to make more money where I could escape my job. And that's bad to say when you're 22 years old, but I knew I wasn't going to like it that much. The environment's kind of dirty. It's in manufacturing and all that stuff. And I don't know. It's like I deep down knew. There was a guy in California when I was out there in college, and he was going to check on some rental properties that he owned. He drove a new Corvette Z06. He said he also had a Viper. And I was really into cars. I was pretty impressed by that. And he was just checking on a couple of hotels that he owned in Avila Beach. And he talked to us. He gave a couple people some rides in his car. And I just looked at that guy and I was like, man, I really want to be like him. That is who I really wanted to be like, even though I was going to school to be an engineer and all that stuff. So I never really had the courage to talk to that guy or ask him, how did you get into it and really dive into all that stuff. I guess he lived in Nevada and he was just checking on some properties, probably for tax purposes, is my guess. But that guy is someone I was like, man, I really want to be that guy. I never had that feeling at any of the jobs I worked at where I wanted to be anyone above me. I still don't have that, even where I work. I was like, I don't want to be this guy. I don't want to be any of these guys. I don't know if you guys have that same feeling. Put it in the comments section. I'd like to know what your guys' feelings are. I don't really talk too much about that. I've asked some people, but do you really want your boss's job or like two jobs ahead of you or something? I think that's highly important to stay focused and to have the drive to work there, is to want positions that are above you and kind of climb that hierarchy of chain or whatever. And I just don't have it. I don't know. I lost it a long time ago. I used to have it when I was really young, but I don't know. I kind of guess I jumped off the train in my 20s. Here's JC. He says, I'm not going to bet that the US dollar rallying above the first half lows and stocks going up is something that will happen at the same time. So this is the US dollar index. I thought this was interesting. Support. We came back down. Is this a false breakout where we then go higher? I think he might have this right. And interest rates very much look like they want to go higher. So this could be a outcome where the dollar and interest rates going up together. You got Peter Schiff here. He says, when gold prices rose from 35 in 1970 to over $800 in 1980, the yield on the 10-year U.S. Treasuries rose from 7 to 13% during that same time period. Traders who are selling gold now based on rising bond yields still don't understand why bond prices are falling or what it portends. And I agree with him. What I have been watching on our daily technical analysis, I say this every once in a while, I'm waiting for this relationship to break. And it broke down in the 1970s when interest rates were going up, stagflation, where inflation was high and markets were contracting or going slow. And gold did not behave like it has in the past 40 years. It actually broke that link. So gold went up with interest rates. And I think we can do that again. It says the US bond market is on the verge of a major breakdown, and that will send mortgage rates to levels unseen since 2000 and fuel more banking trouble, per Peter Schiff. Maybe that's the case. I don't know. I also can make the argument that a lot of money's in the bond market. If that bond market is in a major breakdown, like he states, where is the money going to flow after it sells bonds? Because that means there's a major exodus of the bond market. And that money's got to go somewhere. Where is it going to go? Is it going to go into the precious metals area? Well, it can't. There's too much money to absorb it. Too much money going into too small of a market. Is it going to go into the real estate market? Probably a whole bunch is going to go into the real estate market. We could see the biggest boom in real estate based off our bond market collapsing. And maybe even eventually the currency if they try to save the bond market. I don't think I've ever seen a very high rate of inflation and not have home prices go up. Everyone wants a house. They want a nice house. Almost everyone, unanimously. I could sit everyone down, and you guys can do this too. If you win the lottery, what's some of the first things that you would purchase? Probably a really nice house. That's what everyone intrinsically wants. And if you need to save your assets, if you want to save your purchasing power, and the bond market, let's just say, has a major breakdown, they're going to sell from that. Interest rates are going to go up. The stock market's going to sell off too, which means money's going to rotate into something else. I just don't see how it's not going to rotate into the housing market. I just don't see how. It can't be absorbed by commodities and precious metals because those markets are too big. There just isn't enough to go around. And that's going to be some of the problems of how commodities are going to go up so much, is because there's so much money that needs to move, it just can't absorb it all at anywhere near the prices that we are today. It's sort of sad watching all the macro recession bros hiding in bonds and getting crushed if you don't learn your history. In 1923, Havenstein went before the Senate to boast that his round-the-clock operation of the printing presses now enabled him to produce 46 billion marks in new currency every day. Not a single member of the Senate objected. We've got rising treasury yields are bullish for gold. The result will be larger federal budget deficits, a weaker economy, a falling dollar, rising current account deficits, higher unemployment, lower stock and real estate prices, and financial crisis, ramped up QE, and higher inflation. The one thing that I will disagree with is real estate prices. I think all of the other things will be correct, and I think he is wrong on real estate prices. In the 1970s, real estate prices went up the most they've ever done in history. I think that's going to occur, and inflation in real estate is linked. So you can get a fixed rate mortgage, fix your costs, and under a high inflation rate, you have a fixed, it'll inflate the mortgage away. So here's Don. He says, oil production has not increased since 2018. It might be exceeded in 2024, but the annual decline rate is currently 10%. And the decline rate has been increasing. Replacing 10% of oil each year is becoming very difficult. It's likely we are approaching peak oil production in the near future or already reached it in 2018. Here's the bad news. Oil and economic growth are nearly perfectly correlated. No oil growth equals no economic growth. And he is correct there. So I don't know how this all plays out, guys. World oil production, peak, come down, and we're going to tap it, or are we going to make a new high? I don't know. We'll see. But he's correct. Oil and GDP are linked. Oil market. American commercial crude stockpiles plunged last week by 17 million barrels, the largest weekly drop in data, going back more than 40 years. Here we go, eating through our inventories. You know what I do when I see this? I sit and I wait. And maybe I'll even buy more of some energy service companies that are down, that are in the toilet because they are so cheap. Which city would you prefer? One where you can make 50K and buy a nice 150K home, make 100K and buy a nice 500K home. Well, I don't think that's enough information. There is no way that I will live in some areas that have a $150,000 house and a 50K salary because I don't want to die. I've been in some of those areas. I will never live there, and I would rather choose 100K and a 500K home. Another thing is, and again, this is my opinions here. If a lot of, so when you grow up, you make friends in your schools that you go to. As income increases, generally speaking, the IQ of the people that make more money in that general area also increases, which means that their kids are smarter and their kids will most likely be on a different path than some other kids. So when you look at some of these areas, you can even look back in Minnesota in a couple of spots around me where I grew up. The richer areas had kids that were smarter, and the smarter kids had different goals that their parents enforced on them to some degree. So when you go and you buy and you buy a house in a certain neighborhood, I also look at not just the price of the homes, but also the people that live in that type of neighborhood. And do I want my kids interacting with those kids? And are those goals of the people in the neighborhood similar to my kids' goals as well? Because really, ultimately, the kids' friends, your kids' friends, are going to have a large influence on the outcome of their life. So when I look at this, what I would basically say is, I want to live in an area that I can easily afford, but is the most expensive that I can easily afford. And that is my take on it. So my kids are subject to the best schools with the kids that have similar goals and outcomes that I want them to have. And I am subliminally sending that message through their friends to them to ensure that they have better friends, better environment, better teachers that want to teach these kids and go to those schools than perhaps a bad neighborhood or a worse neighborhood, where the goals and the parents in that neighborhood, the goals that they inflict on them may not be as good. Now, I know that's not 100% directly related to the price of the homes, but I want that type of environment for my kids. And I know that's probably deeper thinking into it than maybe some of you guys are thinking when you're younger, who don't have kids or whatever. Says, wow, looking at the weekly drop, 17 million barrels. Unpopular opinion, net worth is more important than cash flow. Totally agree. Net worth can allow you to do many things. It gains you more flexibility, and net worth can also generate cash flow if you want it to. Mount Fuji is rumbling. This is the Japan 10-year bond yield. Look at that thing rocket, guys. Maybe other yields around the world are having an impact on America as well. It's not just us. It's not just the rating downgrade. It could be other bond markets that are also experiencing very high increases in interest rates and yields, steep increases. Bank of America, small caps remain historically cheap versus large caps. And you know what's interesting here, guys? The same situation occurred right at the beginning of the commodity bull market in 99, 2000. And we're right in that same location, which I think we are very early in this market. I always look for data and information that is a confluence and overlaps with where we are today and all the other charts that I'm seeing. And this could be one of them where small versus large is aligned like this. Everyone seems to be betting on this outcome. Do you see it differently, or is it really going to be like this? Big breakout of the 10-year yield. I think we're going higher. Yes, I do. For how long and what does that look like? I don't know. Maybe it already turned, but it sure looks interesting to me that we could head on higher here. We also can see silver priced in Canada. This thing looks ready to just rip it to the upside. That's also very interesting. And you know what? Maybe this is all correlated together. Maybe we're going to have an increase in yields where people are literally selling the crap out of the bond market and rotating into gold and silver and precious metals. If that's the case, that might be a really good tailwind behind gold and silver mining companies, because maybe we don't get as big of a move in oil and we get an outperformance of gold and silver in relationship to oil for a period of time. Maybe. I'm not saying it was, but maybe. Here's U.S. state and local governments just experienced the worst decline in income tax revenues ever recorded. This was the second steepest year-over-year percentage decline in history, with only the GFC having a worse outcome. Look at this, guys. U.S. state and local income tax receipts way down here in 2023. What is occurring? You're paying less because the stock market went down, and things are slowing down from interest rates, but the interest rates continue to go up, which increases your deficits. And this is your outcome, is this big downward movement. Pretty interesting to see this. It says you must buy on the way down. There is far more volume on the way down than on the way up, and far less competition among buyers. It is almost always better to be too early than too late. Guppy says we are African. We are African. We just don't realize it yet. United States credit ratings have been cut by Fitch. But that's what I've got for today, guys. I'll end it there. It's getting pretty long. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. We got that 50% discount coupon, discount code August. If you'd like to join, we've got a 7 a.m. Mountain Standard Time, Saturday question and answer session coming up. So if you have any questions, see you there. Become part of the community. And we'll catch you guys later. This is Finding Value.